Hey there! Welcome to Forex Trade Online. In this video, I'm diving into the exciting world of Forex trading and helping you take your first steps towards becoming a successful trader. Whether you're completely new to trading or just curious about how the Forex market works, this guide is for you. So, what is Forex trading? Forex, or the foreign exchange market, is the largest and most liquid financial market in the world. Unlike the stock market, where you buy and sell shares of companies, Forex trading involves buying and selling currencies. For example, when you trade the euro and US dollar, you're essentially exchanging one currency for another at a current exchange rate. Alright, let's move on to how Forex trading works. In Forex trading, currencies are traded in pairs. A popular currency pair is EUR-USD, where the EUR or euro is the base currency, and USD or US dollar is the quote currency. When you trade this pair, you're buying the base currency, EUR, and selling the quote currency, USD. If the value of the euro rises against the US dollar, you can make a profit by selling the euro at a higher price. Now let's break down currency pairs. Currency pairs are divided into three categories. 1. Major pairs. These include the most traded currencies in the world, such as EUR-USD, USD-JPY, and GBP-USD. 1. Minor pairs. These involve currencies from smaller economies like EUR-GBP or EUR-JPY. 1. Exotic pairs. These pairs involve one major currency and a currency from an emerging market like USD TRY, US dollar, Turkish lira. So, how do you start trading Forex? It's easier than you might think. Here's a simple guide. 1. Choose a reliable broker. You'll need a Forex broker to execute your trades. Make sure they are regulated and offer a user-friendly platform. 1. Open a trading account. After choosing your broker, open a live or demo account. A demo account allows you to practice trading without risking real money. 1. Learn the basics. It's essential to understand concepts like pips, leverage, and margin. Pips measure price movements. Leverage allows you to control a large position with a small amount of capital, and margin is the money required to open a trade. Let's quickly go over some important terms. 1. Pip. The smallest price movement in the Forex market. For most currency pairs, it's the fourth decimal point. 1. Leverage. A tool that allows you to control a larger position with a smaller amount of capital. But remember, it can magnify both profits and losses. 1. Spread. The difference between the buying and selling price of a currency pair. A smaller spread is typically better for traders. Like any investment, Forex trading comes with its risks and rewards. The Forex market can be volatile, and prices can fluctuate quickly, so it's important to practice good risk management strategies such as using stop-loss orders to limit your potential losses. That said, if done correctly, Forex trading can be highly rewarding, offering opportunities for profit in both rising and falling markets. Here are a few tips to get you started on the right foot. 1. Start small. Begin with a demo account or trade with small amounts until you feel comfortable. 1. Stay educated. Forex markets are dynamic, so keep learning and stay updated on global economic news. 1. Use a trading plan. Set realistic goals and stick to a trading plan that helps you manage risk and rewards. Now that you know the basics of Forex trading, you're ready to start your journey. Don't forget to subscribe to our channel for more tips, strategies, and market insights. And visit fx-tradeonline.com to dive deeper into Forex and crypto trading.